Thanks so much for joining us today, and welcome into America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Chaz Price. 419-794-3030 is the phone number. That's 419-794-3030, online, arhq.com. My name is Chris Swan. Today on the show, a big heads up as the Fed gets ready to start cutting interest rates, how to make an inheritance last longer, and what is the first step you should take in retirement planning, all this and more. But first, let me check in with the guys and say hello to a combination I have not said hello to in quite a while. Nolan, Chaz, glad to be with you guys. How you doing today?
Yeah, I'm doing well, Chris. It's good to be back on the show. I'm glad to be sitting in the chair and hanging out with you guys. As you may or may not know, I've been spending a fair amount of my time getting our Cincinnati Dayton office kicked off. We're happy to and excited to be building the brand of the Retirement Guys down in Centerville. It's about 20 miles south of Dayton proper. And excited to be working with the more than 30,000 military professionals, government employees down there that, just make all these freedoms that we enjoy possible. So I'm excited about that and look for more details on that coming up.
Yeah, great opportunity. As a veteran-owned business, we love serving our veterans. We really, really appreciate it. And in fact, just this past weekend, my youngest son, Carter, was working on completing his Eagle Scout community project. So what we did is we went out to Hooves and we worked on building 3 new horse feeders out there. So it was a great project to give back to a great organization that I serve on the board for, helping our veterans with post-traumatic stress. We have 5-day retreats, and our retreats are going to end in October, so not too long before our retreat season ends up. And I know with a lot of our veterans, the 5 days makes it somewhat difficult to get time off of work from family. So last month, we went out and we did some 2-day equine-assisted wellness and stress management workshops. We had so much success and attendance in our August event that we went ahead and were able to schedule another event September 12th and 13th. So if you are a veteran, this is a 2-day class aimed at enhancing wellness, improving communications, managing stress, and what is definitely a stressful environment in the hands-on workshop with our horses. You can sign up for that event if you go to hooves.us and click on the events. Come out to our September event. We also, of course, do have those 5-day retreats. We'll be going between now and October when we wrap up our season. But it's good to have nearly over 100 veterans come out to our programs this year and help support our local community and those that travel from around the U.S. So we welcome veterans, whether you're here listening locally on Toledo's largest talk station or whether you're watching around the U.S. on our YouTube channel. We'd love to have you as a veteran come out to one of our upcoming retreats.
Again, as a veteran-owned business, America's Retirement Headquarters, Nolan Baker, very passionate about making sure that our veterans are taken care of. And so, once again, if you'd love to attend that retreat, you can go to the website. That is hooves.us to find out more information and go ahead and reserve your spot. So let's turn our eyes to the market here, the stock market. It seems to react pretty quickly to any new economic numbers that come in. The question is, should you do the same? Matt Orton, he's with Raymond James, and he said this recently on Fox Business.
We all know the economy is starting to slow. We know there's cracks starting to form in the labor market. We know the consumer is starting to slow down. But what is evident when I listen to all of the different corporate earnings reports, when I go talk to consumers and I travel around, people are still spending money and corporate America is continuing to do well. So when you put all of that together, I think it paints a reasonably bright picture for the overall economy, and it gives me optimism in this bull market going forward.
Now, I know something that you guys do, with your clients is helping instill that discipline. How successful has it been with getting clients to, quote, tune out the noise? Can overdoing it when it comes to financial news be harmful for a retirement saver?
I tell people that all the time. I say, turn off the financial news, turn off the news in general, and turn on the Travel Channel because it is an emotional, painful lesson to go through. When we look at it, I think about one of our most popular events that we have of the year. It's called our Economic Summit. Our Economic Summit is coming up. It's October 2nd. It's going to be held at the Hilton Garden Inns in Perrysburg. And Chaz and I are serving on a panel together, and we're going to be talking about some of the discipline principles that you see when it comes to the legends of investing. If we think about, who are some of the legends, there's been a lot of them out there. But if you think about what, people like Warren Buffett or Peter Lynch or Benjamin Graham taught us, They taught us some really good principles, and those principles focus on, how to be successful as a long-term investor. And when we think about retirement, we think about, that journey is a journey that's going to last a long, long time. So what happens today, tomorrow, quite frankly, even in the election, is just short-term noise, and that can cause a lot of problems for those investors when they lose track of that long-term focus. One of the things that you want to do is you want to find somebody with a proven track record, stick with their methodology and their philosophy of investing over time. I don't know about you, Chaz, but I think consuming too much financial news can be harmful for several reasons. It's like, information overload. Making that consistent exposure to the financial news can overwhelm you with data, opinions. Anybody is willing to give you an opinion today. With the advent of social media, things like that, somebody can open up a TikTok account and share their opinion about the market. Not saying that necessarily you need to listen to our advice, but we've been on here on Toledo's largest talk station for over 20 years now. We have over 150,000 views on our YouTube channel, and we're trying to give you that advice that's focused on those folks that are close to or in retirement time, and trying to help you make smart, educated decisions by explaining to you the things like the Retirement Team Action Plan. Listening to that information ultimately can result in emotional reactions. We are human beings, so that financial news is going to drive on your emotions of fear and greed. It can lead to panic selling during a bad market dip, or chasing trends that maybe aren't aligned with what your long-term goals are. News has a bias and sensationalism. I mean, if you look at the news, they get really stuck and focused on on different articles that they want to promote or attract, and it really can kind of skew your perception about actual market conditions. I've experienced this myself when you buy a newer vehicle and switch to that new car, and you think, that's the only one in town, and then as soon as you drive it around town, it's like, within a couple of weeks, you're like, oh my gosh, there's another one. There's another GMC that's red, just like mine, in my neighborhood that I didn't even notice before I had it. Number 4 is it helps really enforce the short-term focus, which can be a long-term detriment to your investment strategy. And it just reduced productivity. Again, even my parents, I wouldn't go over to my mom's house and she'd always have Fox News on and be sitting there in the house. She'd be better off getting outside, going over to Fallen Timbers, taking a walk around there, enjoying the outdoors. She'd be better off maybe getting on the bike and doing something that's good, that's outside of there. But it's been my experience that you really kind of need to tune out that financial noise of listening to too many people. What you want to do is find out, again, somebody who specializes in the area that you focus on with that track record, that you understand their investment methodology, philosophy, and then what you do is you try to eliminate all the noise that's out there. The final thing, before Chaz, I'd love to hear your input, would be to come out to our economic summit. Again, that event's coming up. We're going to be talking about the legends of investing. So our economic summit, you can RSVP for that event by going to arhq.com, click on the events tab, and at arhq.com under the events tab, you can register for the economic summit and learn from the legends of investing about how to position your portfolio moving forward.
Yeah, and Nolan, as you know, I've never really been a fan of making investment decisions based on emotion. I know that some advisors have what they would call a gut instinct, where they can't really articulate why they made a particular decision. It's just kind of, I think, or I felt that way. And generally, if you hear an advisor, or you're shopping for advisors and you hear somebody say that, you may want to consider shaking hands and just parting ways, because it's definitely not, in my opinion, a fiduciary standard of practice where we can identify the reasons why we made that decision, and it can't just be based on what you think or feel. And generally, I like to just separate emotion from money as much as I can. So that being said, there are some actual statistics. Just recently was doing a presentation on, or part of our newsletter article was in reference to that 1,200 point drop day we had a few weeks ago. It was just a big, drop in the market. It had something to do with overseas markets, us waking up in the morning and the market trying to digest it. But essentially, if you miss out on the 2 best days in the market, or maybe it was the 20 best days in the market, it cuts your return, your long-term return, by about half. And so, being in the industry, I've heard that. I think that trend has gotten, that difference has gotten even more pronounced just because we've had some really good years, really good markets. And so by getting out, you inevitably will miss what generally is a pretty good rebound the next day or the next 2 days. So not only is it a stress factor on your life where constantly checking the markets and financial news just creates that anxiety, but and maybe even overconfidence too. If you're seeing your account grow day after day after day, markets are up, you could be, you're getting a little bit overconfident. The markets are not always going to be this high. So staying grounded, and I think also maybe automating your investments as much as possible, creating a systematic either contribution or withdrawal program so that we're dollar cost averaging into some of these big ups and downs. And then education, as you touched on, Nolan. Education is key. The more you understand about your portfolio, I think the more confident you're going to be in riding out the ups and downs. And generally what we'll do when we're having that conversation with clients is we'll talk about a measure of risk is up and down. And so if in any given year, we're down, but we're within the support and the resistance which we originally said we would be, I think that's a fair assessment of how we're performing, because you need to expect a little bit of ups and downs. And we try to do a pretty good job of educating our clients to the best of our ability before the eyes start glazing over of what you should expect going into this investment in the first place. I think that's one of the key metrics to getting through this volatility.
That education is key, making sure that you are informed. One thing that the team at the Retirement Guys Formula doesn't do is talks over you. They try to talk with you, talk to you, make sure that you are as educated as possible, why they are recommending what they recommend, when they sit down and they put together these retirement team action plans, to make sure that you understand you can make that well-informed decision. It's not based off of gut or instinct or emotion, but the facts and the figures and the methodology that they've utilized as long as I've had the pleasure of working alongside them. And so to find out more, you can go check out other videos and continue that education. Just search for America's Retirement Headquarters, also available via podcast. Or they invite you to come out to one of the upcoming classes that got coming up, especially that Economic Summit on October 2nd. If you've got the time, they'd love to have you out there. You can give a call, 419-794-3030, or you can go to the website, find out more, and go ahead and reserve your seat. That is arhq.com.